And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you from Westlake Village, California. It was a nice long weekend in Big Bear. Couple of flat tires, a long ride with a tow truck driver. Gave me a lot of time to study up on them charts. And first thing I want to bring our attention to is the 4-hour time frame, which we did say last week on Friday. We had a bit of a bull trap and a bear trap. And if we were to lose this trend line, we said very, very likely things were going to come back down, test around the green 55. And thus far, that is what we have seen. Still holding the range at the moment. And the next thing I'll bring our attention to is the 4-day time frame, where we said, hey, look, and this is kind of the giveaway here, guys. Any kind of a tick below this, we were calling it 26, 666, 652, whatever exchange you're on. We did get the tick below there, and very likely that does bleed on into a little bit more downside. 25.5 is the first target. Also note as well, same thing on the 5-day time frame. We got a tick below there. And on the weekly time frame, very, very likely alluding to a bit more downside in the coming week. What else to note coming up this week on the, just so you know, it looks like the cftc is suing Binance over willful evasion of the U.S. laws. Binance not exactly in the hot seat right now, or in the cold seat, whatever you want to call it. The other thing, I wanted to look at the main economic events coming up this week. The Kobisi letter did have a nice little piece on that, if I can find it here. They also had a couple of things. So one, let's see if I can pull it up here. I don't want to spend all day looking for it, but yeah, this is what I was reading. So since March of 2020, we have seen the largest pandemic in over 100 years, over $4 trillion in printed stimulus, interest rates lowered to zero overnight, and then interest rates rising at the fastest pace in history. Inflation hit its highest in 40 years, the closest we've come to World War III. Oil prices going from negative to $100 with record high gas prices. The largest crypto bear market in history, record high credit card debt, $986 billion, most unaffordable housing market in history, second and third largest bank collapses in U.S. history. And if you started investing in 2020, you've seen the more historic events than most people have seen in 20 years. Volatility is the new normal. And I would agree with that. Volatility is the new normal. Who's next? When they're talking about the banking people, I heard the next on the chopping block was not Credit Suisse, but apparently Credit Suisse is already getting taken out. It was the other big bank in Switzerland. Gosh, I'm drawing a blank here. But there's another one that seems to be going down in Switzerland. And it's like, where does all the bailout money come from? Well, overdraft fees gets paid by the lowest percentage income people. The lowest 9% are pretty much the people that pay all the fees. Okay, here it is. Consumer confidence data on Tuesday, that's tomorrow. Home sales data on Wednesday. Q4 2022 GDP data on Thursday. That will let us know if we're going into a recession. And remember, the big X factor we've been talking about is a bond crisis paired with a recession. That's what could get us back down to the $10,000 target we've had pretty much since last year. Don't forget to give us a like and tickle the bell, subscribe. And then, yeah, let's touch back in on the Gaussian channel, which we've been talking about as well. And 28,000 was the number we needed to close above on the weekly time frame. which we closed right on the mean band. Pretty much looks like a rejection to me, as they call it, a bit of a Jesus toast right there, or I think that can be called a Jesus candle. So did we close below it? We did not close above it, that's for sure. So the weekly closed at 27,972. 28,000 was the target, and I am at least targeting to move down to that 25.5 region, getting rejected from the mean band, and would be curious to see if we come all the way back down to the bottom side of that band. We'll judge it as we go. What about 3-day divergences? This is another big one that has been rather faithful in producing some fairly nice downward swings. So hidden bearish divergence. Price is still making lower highs. If we confirm this 3-day, and let's see if the 2-day has already confirmed it. Not quite. We need to see a closure below 26,650. So if we start to close, dailies or 2 days below that 26,650, and very likely coming down to this green box, and that is right where the 0.5 and the 618 are. If we just throw up our Fibonacci retracement tool, yep, right in that box, that's the area for where you'd be looking technically for the next major higher low, because we do have a nice little uptrend here, higher highs and higher lows coming on through compared to these highs over here. However, we can confirm this, and you might as well be able to confirm it with a tick below, or a closure below this low, and we will see momentum cross to the downside below 27,677. So momentum will have a chance to cross to the downside today on the 2-day time frame. What about the daily? The daily has already crossed down, and yep, with volatility declining, that would indicate kind of that mean reversion back down to kind of that mid-range right there at 25, call it, well, it's more like 24 to 23,000. And what else odd to note, I just noticed here, dollar has been coming down as Bitcoin's been coming down again. NASDAQ is down, did hit our topside target, and NASDAQ looking the strongest out of all the stocks right now. The others are kind of grinding along this major support line, and if they start to lose this region, again, the base case for our S&P here this year is a run down to that 3,200 level. I think it's more clearly seen on this chart. Yep. Base case is for at some point this year, S&P does come down to the 3,249 level. The other thing coming up for Bitcoin is, well, it is the options expiration. So the quarterly is coming up, closing here in how many days? We got 4 days left in the month, guys. 4 days left in the month. However, this does confirm as a higher low here, and with a big green candle like that, I mean, yes, you can get a backfill. Where do those backfills come down? Well, to the prior wick, and I'm just going to take off. Where do the backfills come down? Right here, 21.5. That's perfectly okay. After a mega month or a mega quarter this year, great start to the year, Bitcoin. But can we continue to show ourselves strong amidst economic turmoil and collapse is the question. So if we do close above this 9 exponential, that'd be kind of the first warning sign we're going to get more upside. That's right at that 26,777 line. And, on the monthly here, we are rejecting at the 21 so far. The month will close in 4 days and 7 hours. To me, that, does look like we're probably going to get a little up and back, something like this. Maybe we, come down and test this region and then get the bounce up to 32,000, something like that is definitely possible. The other thing to note here on the quarterly chart I'll just pull up my other index here. Where is that long-term trend line coming in? All the way back from 2018. And that still does give us a chance. You know, Bitcoin can be quite volatile. Also, we are approaching the, halving cycle. So, typically we're going to get some kind of a rally in there. But again, the X factor is, are we going into a recession with a bond crisis? Let's check out those bond prices really quick. Bonds. So the 2-year back up at 4% does look like it wants to come down more. Same thing with the 10-year coming in at 3.5 and the 30-year at 3.75. So you do have that yield curve conversion, and this one does not say down yet, but by ticking below there, very similar to Bitcoin, that would lead you to a move to that 9 exponential. What else do I want to bring up here? And then also just kind of go over a couple of trade setups I am looking at here on Stacks. Stacks I'm looking to come down here by ticking below last week's low. Stacks probably gets a swift move down to 77. AGIX already hit the 9. CFX did get a tick below there. So this one, measuring the move down. Ooh, that's 20% to the downside from where we're at today. I believe on Stacks, we're looking at about a 14% move down. And so how would I be trading something like this? Well, I'd pull out the daily time frame. And really, as long as we are below this prior low, I'd say down move is intact. And probably going to make a run for that green 55. Let's see if that lines up with the weekly. And it does. It does. It's pretty close. Close enough is close enough. And this will be coming up, well, next week, slowly moving up here. But I do say that is it's not the greatest risk to reward because we're already, quite a bit of ways away from this asset. But let's see. I need to take the short tool, short position. And if we took it right from where we're at today, I'd be putting it somewhere like this. So, pretty much a even risk to reward ratio, but I think the odds are in favor of the bears for something like this. What else do you see is most of the altcoins are rotating downwards and heading back, down to the range lows. Sand back at the bottom of the range here, not quite, I'd say a little bit further down. This was the deviation below. SSVB coin has not melted down yet, so might have a little more potential on this one. VRA, how's that? Yeah, VRA absolutely getting killed on the weekly here. Probably going to fill in this wick. What about AVE? Let's see. AVE is, formed a bit of a complex top, and any kind of a daily, let's see where we're at right now. Daily says down, volatility is just beginning to decline, so I would be looking for this one to come back down and probably test around this region right here. Cardano, how's my Cardanos? This is a pretty good sell in my book, crossing down. You still have the silver cross to the downside on the daily time frame, so if we get kicked back into the bearish control zone, that is not going to look good. And you can see we are breaking this major trend line right here on the daily time frame. No, maybe it's not broken yet, guys. Maybe it's not quite broken yet. You could have it back to something like that. Three touches making a trend here. So we got 1, 2. Maybe not 3 touches. That would be more essentially how I'd be looking at this breaking down right now. And do we have any divergences? Yeah, you can see just a whole slew This one actually looks like a great short setup for a run back to the bottom side of the range. So you got just lower highs all the way through. So you got higher highs in price. 1, 2, 3, 4. And where would I be based on the 4 drive philosophy? Yep, that's going to take you right to the 1618. And a little bit easier way to manage the risk on this one. Again, as long as we are not above yesterday's high, I would expect this thing to continue onwards and downwards for Mr. Cardano at the moment. All right, that's it for today, guys. I hope you have a blessed and highly favored day. I will be bringing you back another video on Monday. Take care. Or on Tuesday, tomorrow. Take care.